QQQ versus JEPQ. Which ETF is the ultimate game changer? Welcome to WealthEchelon, your go-to destination for expert insights on finance, stocks, and ETFs. Our mission is to empower you with the knowledge and strategies needed to navigate the financial markets with confidence. Whether you're a beginner looking to build a strong investment portfolio or an experienced investor seeking market trends and analysis, we've got you covered. Join us as we break down complex financial concepts, explore market opportunities, and help you climb the ladder to financial success. Subscribe now and take control of your wealth journey. Today, we're diving into two heavyweights in the ETF world that will transform your investment strategy, QQQ and JEPQ. One of these ETFs is offering a jaw-dropping yield of over 12%, while the other has consistently outpaced the S&P 500 for the past decade. But which one is the ultimate game changer for your portfolio? Stick around because in the next few minutes, we're going to break down their yields, payout ratios, and everything you need to make an informed investment decision. Imagine this: a $100,000 investment today. One of these ETFs could potentially grow that investment to an astounding $1,745,194 over the next 30 years. On the flip side, the other ETF could generate substantial dividend income, ensuring a steady cash flow that might just make retirement a lot more comfortable. Can you guess which ETF does that? We're diving into the latest data from July 2024 to uncover these secrets. But that's not all. We'll also dissect the yields and payout ratios of these two ETFs, compare their performance, and explore which one aligns best with your investment goals. Whether you're chasing explosive growth or seeking reliable income, we've got real numbers and solid analysis to help you decide. Holding the investment for 30 years, Martin would accumulate around $375,000 in total dividends. Here's the plan for today. We'll break down the current yield and payout ratio of each ETF. Next, we'll analyze the growth potential and historical performance. Finally, we'll reveal which ETF might be the perfect fit for your portfolio. Stay tuned because by the end of the video, you'll know exactly which ETF could be more of a game changer and what your portfolio needs. Ready to unlock the secrets of QQQ and JEPQ? Let's dive in. Invesco QQQ Trust. The Invesco QQQ Trust, commonly referred to as QQQ, is one of the most popular exchange-traded funds, ETFs, in the market, tracking the NASDAQ 100 index. This index comprises 100 of the largest non-financial companies listed on the NASDAQ stock exchange, making QQQ a favorite among growth-oriented investors. Managed by Invesco, the QQQ ETF has consistently attracted significant investor interest due to its focus on technology and innovative companies. As of July 2024, QQQ boasts a compound annual growth rate, CAGR, of 18.2% over the past decade. This impressive growth rate is driven by its heavy weighting in tech giants such as Apple, Microsoft, Amazon, and Alphabet, which together make up nearly 40% of the fund's total assets. These companies have shown remarkable growth. Apple, 5-year compound annual growth rate of 20.1%. Microsoft, 5-year compound annual growth rate of 18.6%. Amazon, 5-year compound annual growth rate of 19.4%. Alphabet, 5-year CAGR of 17.8%. Expense ratio and payout ratio. Expense ratio, 0.20%. Payout ratio, 28%. Dividend yield, July 2024, 0.55%. The expense ratio is relatively low, making QQQ attractive to investors who seek exposure to high-growth tech stocks without incurring substantial costs. A $10,000 investment in QQQ would result in an annual fee of approximately $20. The payout ratio of 28% reflects a strategy of reinvesting a significant portion of earnings back into the companies within the fund, supporting continued innovation and growth. Performance and growth potential. Over the past 5 years, QQQ has delivered an average annual return of 21.4%, For example, Apple's revenue grew from $260 billion in 2019 to $394 billion in 2023, showcasing its ability to generate substantial returns for investors. If an investor puts $100,000 into QQQ today, assuming an annualized return of 10%, the investment could grow to over $1.2 million in 30 years. Summary: QQQ offers investors a unique opportunity to gain exposure to the most innovative and high-growth companies in the market. Despite its relatively low dividend yield of 0.55%, the potential for significant capital appreciation makes QQQ an attractive option for long-term investors. JP Morgan Equity Premium Income ETF JEPQ. The JP Morgan Equity Premium Income ETF JEPQ is an income-focused ETF designed to provide investors with an attractive yield and capital appreciation. Managed by JP Morgan Asset Management, JEPQ generates income by investing in high-quality, large-cap stocks while utilizing a covered call strategy to enhance its yield. As of July 2024, JEPQ has a CAGR of 7.8% over the past 5 years. The fund's combination of high dividend stocks and covered call options enables it to achieve a balance between income and growth. Top holdings and performance. JEPQ's portfolio includes leading companies such as Johnson & Johnson, 5-year compound annual growth rate of 6.2%, Procter & Gamble, 5-year compound annual growth rate of 7.1%, Verizon Communications, 5-year compound annual growth rate of 4.8%, expense ratio and payout ratio. Expense ratio, 0.35%, payout ratio, 85%. Dividend yield, July 2024, 12.5%. JEPQ's 12.5% dividend yield makes it one of the highest yielding ETFs in the market. This high yield is achieved through a combination of dividend income and premiums earned from selling covered call options. Performance and growth potential. Over the past 3 years, JEPQ has delivered an average annual return of 9.5%. For instance, Procter & Gamble's stock price has risen from $125 in 2019 to $155 in 2023, reflecting its steady growth in the consumer goods sector. A $100,000 investment in JEPQ could generate $375,000 in total dividends over 30 years, making it a compelling choice for income-focused investors. JEPQ stands out as a top choice for those seeking to maximize income while still enjoying some capital appreciation. With a high payout ratio of 85% and a robust dividend yield of 12.5%, JEPQ is a valuable addition to any income-focused portfolio. Which ETF aligns with your financial goals? Are you drawn to the explosive growth of QQQ, or do you prefer the steady income stream of JEPQ? The choice is yours, but understanding how each ETF fits into your financial strategy is essential for making the right decision. Key takeaways. QQQ, the growth powerhouse. If you're looking for long-term capital appreciation and exposure to some of the world's most innovative companies, QQQ is the go-to ETF. It tracks the NASDAQ 100 index, which is dominated by technology giants such as Apple, Microsoft, Amazon, and Alphabet, companies that have consistently delivered strong revenue growth and stock price appreciation. With a historical average annual return exceeding 18% over the past decade, QQQ has significantly outperformed the broader market. However, this level of growth comes with volatility, as tech stocks can be highly sensitive to market cycles and economic conditions. Investors who choose QQQ should be prepared for short-term price swings, but can benefit from substantial long-term gains. If your goal is wealth accumulation over decades and you have a high-risk tolerance, QQQ can be a strategic addition to your portfolio. JEPQ, the income generator. On the other hand, JEPQ is designed for investors who prioritize stable, high-yield income rather than aggressive growth. Managed by J.P. Morgan Asset Management, this ETF follows a strategy that focuses on dividend-paying stocks while utilizing a covered call writing technique to generate additional income. As a result, JEPQ offers a 12.5% dividend yield, making it one of the most attractive options for those seeking passive income. JEPQ's portfolio consists of well-established, lower volatility stocks such as Johnson & Johnson, Procter & Gamble, and Verizon Communications. While it may not experience the same explosive growth as QQQ, it provides consistent cash flow and lower exposure to extreme market fluctuations. This makes JEPQ particularly appealing for retirees, conservative investors, or anyone looking for reliable monthly or quarterly payouts. Which ETF should you choose? Ultimately, the decision between QQQ and JEPQ depends on your individual financial goals, time horizon, and risk tolerance. If you're a long-term investor looking to build wealth through capital appreciation and are comfortable with market volatility, QQQ is the right choice. If you prioritize steady income, lower volatility, and consistent dividends, JEPQ is the better option. Some investors even choose to hold both ETFs in their portfolios, leveraging QQQ for growth potential and JEPQ for passive income generation, creating a balanced approach to wealth building. No matter your strategy, making an informed decision today can have a lasting impact on your financial future. That's it for today's video. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you never miss an update. At WealthEchelon, we're all about helping you navigate the world of crypto, investing, and financial growth. Have any thoughts or questions? Drop them in the comments below. I'd love to hear from you. Stay sharp, stay invested, and I'll see you in the next one.